Hello and welcome to our latest Money Show Money Masters podcast segment. I'm Mike Larson, editor-in-chief at MoneyShow, and today I'm speaking with Shana Sissel, founder and president of Banrion Capital Management. Welcome to the podcast, Shana.
Thank you very much for having me. Very much appreciate being here.
Glad you could be here. Glad you could be here. You know, I was looking back, and the last time I had you on the podcast was all the way back in February 23, and I think it's fair to say the markets have changed just a little bit since then. But one thing that hasn't changed a lot is a generally bullish market environment. We had that backdrop then. We seem to have it now. So I was wondering if maybe you want to start from kind of like 30,000 feet up and tell me what you're seeing out there.
So it is remarkably bullish. The economic environment is very positive. We have very strong economic growth here in the US and, even abroad. For that reason, this feeling the Fed was going to cut always seemed a little crazy to me. People kept saying, well, they want to keep interest rates in a reasonable, but I always felt like if the point of cutting interest rates is to help with this demand, right? Raising rates is to, weaken demand. Cutting them is to strengthen demand. And you have really good demand. If you cut interest rates too soon, you end up exacerbating the problem. So we've started to see the Fed be more hawkish, which I view as a good thing. Inflation continues to be persistent. Oil prices are up, and there's all sorts of reasons to feel good about the economy, but also know that the higher for longer is how it's going to be. The Fed is likely to achieve a soft landing if they maintain kind of that hawkish stance that they're in. My bigger concern is if they were to cut rates too soon, that could be problematic.
So you think the market, again, we started this year in rate futures markets, we're looking at 5, 6, maybe even briefly almost 7 cuts there. And now we've dialed that back to 1 or 2. Why do you think that the markets have been okay with that? I think if you had said that 3 or 4 or 5 months ago, people would be kind of surprised to hear it.
Because the economy is so good. Earnings are good, fundamentals are good. And I think consumers are still spending. The job market hasn't broken. Those things are all good things. And it's actually positive for stocks. So as long as we continue to have strong economic growth, we have a robust job market. When people have jobs, people spend money. And those things kind of all go hand in hand. As long as those continue to be true, I think that's good for stocks. And I think that that's why the market is not all that upset about 1 to 2 cuts. I actually don't think there will be any, but that's just me.
Got it. Well, one of the big issues, again, you dial it back 4, 5, 6 months ago, everybody was talking about the Magnificent Seven, the Mag 7. A couple of those names have clearly lost their magnificence, and yet here we are, we're still holding up. Any thoughts on that? Is that because we're seeing more rotation? Why do you think the market's able to deal with the loss of a Tesla or to some degree an Apple as well?
Well, when you have more breadth in the market, that's a good thing, not a bad thing. You don't want the market being led by 7 names. That is bad for stocks, folks. Bad. You want to have breadth in the S&P. You want to see all, rising tides lifts all ships. That's a healthy sign. When it's 7 stocks that are driving everything, that's not a healthy sign. This is actually a good thing.
Got it. You were on with Katie Greifeld with Bloomberg not too long ago, and you did talk about the earnings outlook there, and that the market was kind of doing a better job of picking winners and losers instead of just sort of all in on those Mag 7s. What are you seeing some of the best growth, or where do you expect some of the best growth as we move forward in earnings this year?
Well, I continue to be positive on the technology sector. We have trends in technology that are occurring that are, generational transformations, AI in particular, that we're still very early in, which is positive for technology. I do think you'll start to see energy. I think this idea that we could move away from fossil fuels has been debunked. People have started to realize that this isn't actually realistic. You're starting to see even the auto manufacturers decide, hey, maybe EV isn't the way to go. We're going to focus on hybrids, which I actually think is smarter. It's not the case everywhere, but here in the US, our grid just is not ready for an all EV auto force. And so this hybrid model actually has a lot of benefits, and you're starting to see that. But that requires fossil fuels because hybrid cars still have ICE engines. The hybrid electric part of it is actually in the axle, which I actually think is pretty cool because it doesn't actually rely on the grid, although there are plug-in hybrids. But my point being is that energy should do well as we've come to realize that demand is there and there's going to be less constraints as governments start to realize that, you can't constrain this, it's going to affect inflation. And so energy is a place that I'm really interested in. And I think industrials are always interesting because industrials is kind of the catch-all sector, right? Like there's so many random things in industrials, from like temporary employment, Robert Half, to Caterpillar. You have all these random kind of companies that fall into that industrial sector, and industrials can always be interesting at any given time because of that.
Yeah, okay. You briefly touched on and mentioned AI. Obviously, that's been something that's taken up a lot of investor mind share. I think you made a comment when you were on with Charles Payne earlier this year that it's the wave of the future, not just for tech, but for other industries that are using AI. What did you mean by that?
Well, AI is going to be incorporated in our lives in a variety of different ways. Here at Banrion, we actually are testing AI technology to help us with scaling due diligence and helping our advisors create investment policy statements and client reports, client presentations using AI. I think you'll find that that'll be the case with a lot of things. Cliff Notes, remember that from back in college? Pretty
Yes,
sure
I
AI
do.
is going to take over that market as well, helping college students study. I just think that there's a million different practical applications that you can use AI in that can really improve efficiencies. And I think that alone is why AI is the wave of the future.
Okay. Now let's shift a little bit to the alternative space. Obviously, that's a key area of focus for you and what your company does. What types of alternatives in this environment look particularly attractive, and why?
Well, private credit is the most popular at the moment. In the current environment, obviously banks do better when rates are up because they have better margins. But since the financial crisis, the banking system hasn't been as flexible and open to as many people as it once was, which has given the opportunity for these outside non-bank lenders to come into the market. And that is a growing area. So there's more and more opportunity for investors to be able to invest outside of traditional banking and get better yields because it's really meeting a demand of a market that needs financing. So private debt obviously is an area that has lots of opportunity. You can diversify across private debt in really interesting ways. At Banrion, we have several partners in the private debt space. Some do real estate financing, small business financing, all kinds of interesting things. Real estate is really interesting right now. Obviously, we have some really interesting dynamics across different types of real estate. So if you think about residential real estate, that market's super tight.
Yeah.
But then you look at commercial, and then we have like a transformation that's happening there that's going to have real clear winners and losers. So that's an interesting opportunity as well. But then there's other places like storage and containers, which kind of falls into storage, not necessarily, it's more of like a trade thing. But there's all sorts of different types of healthcare. We have the boomers aging, and right now they're still not the majority of what's in, elderly housing. But they're a massive generation that is soon to be taking up there. And there's simply, I think I read a stat that we would need to have a million more units built to meet the demand that's coming with the boomers. That's substantial. So there's all sorts of opportunities in real estate as well.
As I say, with real estate, you hear in mainstream media sometimes, oh, we're gonna have all these problems with the real estate lending, and these defaults, and it's gonna be a huge issue. And then at the same time, you see, just as we're talking recently, that Blackstone stepping up and spending $10 billion to buy a large apartment REIT. So I'm kind of curious. And there is some talk about maybe we're seeing a bottom in some parts of CRE. What's your take on that?
So I was involved in the launch of an ETF called House, HAUS, which is the first dedicated active residential real estate ETF in the market. And the reason we launched House was because we didn't see anything else in the market that provided investors with a pure play residential real estate. And we saw a lot of opportunities there. And like BlackRock is actually, in my opinion, a little late to the game in the apartment space. We have a massive need for housing. There's not enough here in the US. And with rates where they are, and the housing market's so tight right now, like I challenge anyone to look in their local area and count how many houses are on the market, regardless of price point. And I'm sure it's not many. And I know in my zip code, it's like less than 100. And that's kind of mind blowing if you think about it. And, so there's really a lot of opportunities here because people need housing. And if they can't buy a house, they have to rent something. So there's a real demand for apartments, especially because we've also seen a shift in where population is, right?
Yeah.
So people are moving out of certain areas and going to others, and those other areas need to support this influx of new population. So they're going to have to build apartments. And all of those things need to be taken into consideration. And then, like, to your point, you look at other areas of real estate, and this is the point I was making sooner. We talk about real estate broadly and just intuitively because everybody has to live somewhere. The average person automatically associates real estate with residential, but it's so much broader than that. And commercial real estate is an area of concern. After COVID, there was this huge change in the dynamic of how real estate works, what the demands for real estate were, especially in the commercial space, office space in particular, and what happens with those units because they can't always easily be converted to residential. Which is what we need. There was a great article in the Journal, I think, a year ago, where they talked about why you can't just take an office building and turn it into apartments. There's like windows. A lot of office buildings don't have as many windows as required. And residential, there's all kinds of different issues of how like the architectural blueprints are done in office that actually aren't code for residential and require massive, massive investment. So lots of opportunity if you look underneath in the real estate market, but apartments is definitely an area that is extremely, extremely interesting right now.
Got it. While we're kind of on this tour of alternatives, and obviously crypto and especially precious metals more recently are getting a lot of attention given the breakout we've had in gold. Any thoughts you want to offer on that? I mean, is that becoming a more popular place that people are looking for?
Oh, absolutely. I think the approval of the spot Bitcoin ETFs and now rumors of potential ETH spot ETFs coming down the pipeline makes it more accessible and makes people feel more confident in just the regulatory oversight. We've seen some of the most successful launches ever, BitB and FBTC, that's the Fidelity one. BitB is Bitwise, and then we have iBit, which is BlackRock's. You just look at those three and you look at the flows into them since the approval of the spot Bitcoin. They're the most successful ETF launches ever. And they actually, there was Eric Balkunas on Twitter today, I believe, put something up about how iBit and FBTC have had consecutive days of flows of over a certain amount, puts them in like the top 10 ever.
Wow.
So, there's clearly demand. And I think technology, we talked about like technological trends. Everybody gets caught up in crypto and, oh, it can be manipulated and, oh, it's used by bad actors. Like, I hate to tell you this, folks, but so are dollars. But people forget that crypto doesn't exist without blockchain. And it's not crypto that's the technology that's changing the future. It's the blockchain. And that's not changing. Who has the best blockchain? We can argue that. Is it ETH? Yeah. Is it Solana? Is it, Bitcoin? Like, they all have their pros and cons. But at the end of the day, when you invest in a crypto, you're not investing in crypto, you're investing in the blockchain. And that technology is real. It has practical applications that can change lives and make our everyday transactions much more secure. And that's not changing. So I am a crypto bull. I don't own a ton, but we definitely recommend it to clients for small position size, 1 to 2%. And now with the spot ETFs, it just makes it much more accessible.
Got it. Well, Shana, as we look to wrap up here, you're going to be speaking at our Investment Master Symposium conference that's coming up next month in the Bay Area. I know we're still about a month out, but I'm kind of curious, any particular things you're looking to focus on, or you want to share sort of a sneak peek with people that might be attending?
Sure. So one of the things I'm going to spend some time talking about is we talked about alts. And one of the areas of interest that I really am spending a lot of time talking to investors about today is understanding what an alt is and whether or not an alt is diversifying. It's a major initiative for the Kaya Association. I was part of the revamp of their Fundamentals of Alternative Certificate program and helped write some of the modules. I also appear in some videos in the modules. And we spend a lot of time talking about how not all alts are the same. And so I'll be talking a lot about how private equity and private credit aren't diversifying alternatives, but also what are. And I hope that the audience will find that interesting, because in this day and age, alts are becoming more and more accessible. The democratization of alts is a huge reason why Banrion exists. So it's something that I think and I hope that attendees will find really interesting about how they can better access alternatives and where they belong in a portfolio.
Well, excellent. Shana, again, thank you so much for your insights and for taking some time out here to chat. Viewers, if you're watching and you want to learn more from Shana, she's going to be speaking with dozens of other top trading and investing experts at that Investment Masters Symposium, Silicon Valley, scheduled for May 7th to 9th at the Hyatt Regency San Francisco Airport. You can find more details in the link below. And again, if you like this video and these kinds of materials that we'll put out, please do subscribe to our Money Show channel. Shana, thank you again for your time.
Thank you.